Welcome to the Commercial Real Estate Show, your source for market intelligence, forecast, and strategies. Hello, I'm Michael Bull, your host. Thanks for being with us on one of the 47 radio stations, YouTube, iTunes, or maybe you're on the show website, commercialrealestateshow.com. Remember, we really appreciate hearing from you and connected. Check out our social media sites and say hello and connect and subscribe. Well, today we have a fantastic show for you. We're going to talk about the multifamily market. You know, the apartment industry has done extremely well now for many years, and in some cases, really, the sector's done so well it's surprised people. But how long will it last? Well, today we're going to talk about that. We're going to talk about the factors that may impact the apartment industry. We'll look at some forecasts for moving forward, and we'll share some successful strategies for management, leasing, for investing, and developing. Well, please welcome my first guest. It's Nick Fitzpatrick. He's a real estate analyst with Axiometrics. Now, Axiometrics does a great job tracking the apartment market all through the U.S. In fact, they closely cover over 120 major markets through the U.S. Nick, thanks for joining us today.
Hey, Michael, thank you for having me.
Well, we appreciate it, Nick, and let us know, well, how did 2015 do for apartment performance? It seems like it's been a little surprising for some folks, the increase in rental rates and occupancy around the country. So what happened?
Well, 2015 was another great year for the apartment market. In fact, it was the best full year of growth this cycle, with about 4.9% annual effective rent growth and occupancy rates right about 95%. We're really seeing strong performance in the apartment market. You're right, it is surprising people a little bit just how strong it has been and has continued to be. Since the recovery began, we seem to have just built and seen more growth. And the question is, how long can that really last?
Well, that's amazing. So 4.9 effective rent growth. Put that in perspective for us. How does that compare to, say, historic rent growth?
So the long-term average is really about 2.2% when you look back. So, you know, when you're talking about almost 5% rent growth, it's really phenomenal rent growth. When you look back at 2.2%, it really just shows just how strong the apartment market has been.
Yeah, it reminds me of I'm a broker, right? So that's our pro forma. Oh, rents are going to go up 5% a year.
Yeah, you're loving that.
And so talk about occupancy. So how is that compared to the average?
So really, occupancy over the historical periods, right around 93, high 93, 94%. So when you're looking at 95%, 5% vacancy across the country it's incredible. It just speaks to the demand that we have for apartments right now. We have just a lot of new supply coming in, but we're holding that occupancy really, really high. Again, speaking to the demand, and that allows apartment owners to keep pushing those rents.
Okay, we're talking with Nick Fitzpatrick with Axiometric. So, Nick, what about the kind of the B and C properties? I think everybody thinks, well, the A's doing well, right? What do you see there?
Well, really, it's the B and C properties at the moment that are really causing the high rent growth that we're seeing. So, Class A properties, you know, that's for us the top 20% of properties. Looking at effective rent level is the top 20% will be considered Class A properties, and those properties are competing with the new supply that's coming in, so they haven't been able to push rents quite as much just because of the extra competition that they've had. So what we're seeing with the B and C properties is they're leading the way, 5 and 6% rent growth for much of 2015, and so that's really, you know, been pushing us to get that overall effective rent growth right around 5%. And then occupancy wise, across all asset classes, have really been hovering right around that 95%. So, we're full across the board. Class A, though, is still strong, right around 4%. Again, competing with that new supply, haven't been able to push it quite as much. But again, still 4% is a really strong rent growth.
Well, that's great news. That means there's opportunities in multifamily no matter what class of community you're investing in. So what do you expect moving forward for 2016? How long will these good times last?
Well, that's the question. So we get into the thought of how long can this really last when you think about the traditional long-term rent growth average, what we've seen, we've just been growing leaps and bounds. So, for 2016, we're thinking we are going to see a little bit of moderation. We started to see some seasonality come into play in the back end of of 2015. We expect to see some seasonality, but it was a little stronger than we might think we would see. So we think we might see some moderation going into 2016, and we might end the year around 3.5% annual effective rent growth. Again, taking into account the long-term average, that's still a really healthy rent growth. We've been spoiled with 4 and 5% rent growth. So when you hear 3.5, that might not sound that great, but really is healthy. And occupancy-wise, we still have a fair amount of new supply coming in, but there's still plenty of demand out there. We might see occupancy drop a few basis points, right around 94.5%. To end the year. So still really strong, fundamentals still good. We might just see a little bit of moderation because the exceptional rent growth we've seen isn't necessarily sustainable.
Right. Boo-hoo, right? Rent growth down to 3.5,
Exactly.
but if historic rent growth 2.2, that's still excellent news. And you mentioned new supply, and it seems like at least in a lot of the cities that we work, we're seeing a lot of new supply. Where are new supply levels, and how does that compare to historic numbers?
So our historic numbers of new supply come in about 275,000 new apartment units per year, long-term average. And so putting that in perspective, 2015, we saw about 340,000 new units delivered. And then in 2016, we're expecting a further 380,000. So it's 340,000 in 2015, 380 in 2016. So we'll see more new supply coming in. But the thing is, the demand is still there to absorb these units, which is the thing. So it might seem like a lot of new supply, but we really have demographics in our favor at the moment. We have more of these prime renters from the 20 to 35-year-olds. We just have more of them in that age group. They're choosing to rent, so they're putting off buying that house. So we have new renters coming in at the bottom end of that age group, and the ones in their 30s that might have traditionally bought houses, they're putting that off. They're staying renters, and so this new supply is coming in, and we really need it because the demand is there for apartments.
And that's great. And are there any markets that you guys track that maybe in case you look at them, you think, well, maybe they're overbuilding?
We really don't see too much slowdown from overbuilding. So you might look at Houston and say there's quite a lot of new supply coming in there, but really it was the oil prices that caused the slowdown there. And yes, they have some new supply coming in, quite a lot of it, but they weren't slowing down because of the new supply. So what we're really seeing is it's more pockets of markets that we're seeing, mostly the urban core downtown submarkets where we might see a slowdown, but it really doesn't affect the whole market. So just for instance, the central Austin submarket, the downtown there, saw a lot of new supply coming in. It slowed down, but then rebounded just because we do have this incredible demand. And then downtown Dallas, the Oak Lawn submarket was the same sort of thing. A lot of concentrated supply there in a smaller area, but it manages to rebound. Seattle had a lot of new supply in their downtown submarket. So really, it's not really oversupply in the market. Some submarkets might be getting quite a lot of new supply, but it sort of rebounds, picks back up, but it doesn't really affect the market overall.
We're talking with Nick Fitzpatrick with Axiometric. So, Nick, are there any communities, some areas, some cities where there might be opportunities for investors or developers where the numbers are looking really good?
Well, the markets that are strong right now, Portland is just the top dog at the moment. We're seeing like 11% rent growth currently to end the year in Portland. The West Coast is still really strong. We did see some seasonality in San Francisco, the Bay Area, but they're still strong performers. The West Coast really throughout is very strong. Tampa and Orlando had very strong 2015s, and Phoenix and Vegas. So those markets that sort of got hit quite hard by the housing crash, they came back really strong and have been strong for the past year and a half. So Phoenix and Vegas are good ones as well.
Okay, well, some good markets to look into. And what about B and C communities? Do you think there's still some good upside in some of those properties?
Yeah, definitely. There's still the option for value add. That's been sort of a hot topic now for a while. So it might be a little bit more difficult to find your site, or there might be some more competition there. But we're still seeing the stronger growth rates in those B and C properties. So yeah, if you can find and get that site, to get that asset, then yeah, there's definitely opportunity there.
Okay, and can you share a quick tip with our listeners before you have to go?
Yeah, definitely. There's so much competition out there. There's so much new supply coming. It's just important to make sure you've got the right data, that you've got the right market scoped out, the right sub-market, the right neighborhood. So it's just important to make sure you've got the right data behind making that decision.
Yeah, well said, and good point, Nick. Thanks for joining today. We appreciate you being on the show.
Thank you very much, Michael, for having me.
Well, stay with us. We're going to have more on the apartment industry, including cap rates and strategies. I'm Michael Bull. This is the Commercial Real Estate Show. Stay with us. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit creshow.com.